Good morning, trading world. It is March 15th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. This morning, there are plenty of data drops to watch this morning. The most important to me will be the PPI, which is what the Fed pretends to watch to gauge inflation. There continues to be a scare on the entire banking industry right now. In the banking sector, perception tends to feed reality. What makes this scary is that there is no batch of bad loans to look for yet, but just overexposed risk. Keeping things simple today, focus on the metrics of how I explained in the 313 pre-market outlook about how the volatility box works and trade at extremes, because we could be here for a little while. The only change is that the top of the vol box may be 393 now. Let's get to the key levels to watch today. Or actually, before I get to the key levels, let me go ahead and highlight what I think is the new volatility box. And we're looking at this 393 area really hard as being the new volatility box. So as we look at the volatility box, things that you can expect is this rapid deceleration in the box to extremes, and then rapid back up to the top of the volatility box. So be very, very careful. I'm thinking today we're going to learn, because I think I had in the past that 387 was the top of that volatility box. So we're going to see what happens, whether we can break above this 387, go back to the top of what I think may be the new vol box, instead of chasing down or heading down to what may be the older box, which I think was 387 down to 376. So I'm going to be paying close attention to see how this works out today, because what we may have is this area here or somewhere around here before we get another spike down. So let's see what happens from here. And I guess that takes me to the key levels to watch for today. All right, here we are with the key levels of the day. Starting on the support side, we have the Jack support at 385 to the 384 area, Queen support 383 to the 382 area, and then King support 381 to the 378 area. On the resistance side, we have our Jack resistance at 387 to the 388 area, Queen resistance 389 to the 390 area, and then King resistance 391 to the 393 area. The main thesis for today is bearish, closing below 391.73 with a projected target low of between 390 and 378. The alternate thesis is bullish, closing above the 391.73 with a projected target high of between 391 and 393. The main channel we are in is from 397 down to 379. The main channel below is 379 down to 364. Now, yesterday market strength and better gapped up to trend day levels for a while before fading strongly and then bouncing. I expect strength to open weak on the day, possibly if it doesn't kind of catch up to where we were, because we could see some follow through pre-market, and that follow through may even get us into or started into somewhat of a bounce pre-market, which could kind of impact where we open strength wise. We could kind of still open weaker, but not as weak. I expect again that open weak, and at some point a slight rally begins. We do have dissonance between the technical side, which is bullish, and the quant side, which is bearish. That brings us into the scenarios of the day. All right, here's our first scenario, which is possibly our trend day down, day type structure, meaning we open gap down and start with a push back toward the previous close represented by the blue line. We then find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support area. Not always, but a lot of the times we do get where it starts looking like a continuation of the primary trend of the morning, but usually turns into some type of rally going into or close to the close. So that is our trend day down. All right, our next scenario is going to be our expanded range day structure. We could begin the day with a continued push lower or follow through on the PPI print. At some point today, we will get a consolidation somewhere possibly around here, and a reversal, which would get us a start back to the upside. That start back to the upside may be short-lived. We could see consolidation again at the top of the vol box, whether it's 387 or somewhere around 391, 393 area, and then see another reversal and start to push back lower. That is our expanded range day structure. All right, our last scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop around either the queen or king resistance before going back down with the same energy or force we went up with the first part of the day. I need to correct that mistake. But also, I want you to be aware of the vice versa alert. And the vice versa alert could be this, where we get a lot of activity pre-market due to that PPI, and we get close or near the actual previous open, and we get a continued push lower the first half of the day, find our midday chop around either the queen or king support area, and then the second part of the day we see a push back up with the same amount of force and energy that we came down with the first part of the day. So those are the scenarios that I'll be looking for and planning for. I hope this helps. It is extremely important that you have your risk in check right now. I always say this in the videos. Your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. Again, I hope this helps. This is going to remain quite volatile, and even getting what I see as even more volatile as we approach the FOMC announcement coming. And that may be where we finally get our bounce that will be insanely strong, taking us back up a good ways. It may be hanging there for a while as we work out. Have to do this all over again, where people start to think that it's not as bad as it looks, and it, buyers are back in the market, and then we get a lot of people hung up again as we start to dismantle the market again. So be very, very careful. Every day you have to start and take that 30,000 foot view just to see where you are, so that you don't get caught up in any traps. Wishing you a positive trading day. Again, I hope this helps. Let's go out and make it a great one.